content on this channel is for entertainment and educational purposes only. We are, not a financial advisor, and nothing shared here should be considered financial advice, investment guidance, or a recommendation to buy or sell any financial instrument. All trading involves risk, and you should always do your own research or consult with a licensed financial professional before making any trading or investment decisions. Past performance is not indicative of future results. Use the information here at your own risk.
Hi guys, I hope you're doing well. So I'm going to start with the backtesting of this week of EURUSD. Let me just quickly check the dates. So basically it's from the 18th of August until the 25th of August. Alright, so let's get going. So now what I'm going to do is I'm going to use the replay tool, and I am going to cut out this week. Alright, cool. So let's go here on the right hand side. I'm just gonna cut out this week. Right, so here we go. Click and delete. Alright. So now we can focus on the 5 minutes time frame. Alright, so let's get started. I want to quickly paste this here. Alright, here we go. So let's start off again with our entry model. I always do this because this is crucial to my strategy, so you can understand what I do. Right, so all I'm going to do is I'm going to wait for the following. I'm going to wait for the testing or the break of a session like this one in front of us, right? Very good example. What do I mean by testing? Testing means the price tests the wick at the bottom or the wick at the top of the 5 minutes candlesticks. Let's do this. Let's zoom in a little bit. Now you can see this, right? Those wicks, those wicks. Alright, so what am I looking for? I'm looking for something like this. So I'm looking for something like this. Price moves up, test or break the session high, price come down, retest the breakout area, and sell. That's what I'm waiting for. What do I need? I need number 1, number 2, and we must have an inverted fair value gap. What is that? So with this move up, there is a fair value gap, and with this move down, we close below that fair value gap. That's an inverted fair value gap, so it must be there. Then of course we wait for at least a 50% Fibonacci tool pullback. What do I mean by that? There's our Fibonacci tool. We wait for at least a 50% pullback. Right there, and the sell-off. And the last rule, 100%, is absolutely needed because it happens multiple times. So if we plan our trade and we take our trade to wherever the last candle moved up here, the most recent high, right? We can take our stop loss there, and we need to add those 30 points, and we aim for 1 to 1.5. That's it. That's all that we aim for. Then I have another entry that I'm looking for. I'm looking for a 2 risk to reward trade as well. Now the rules on that trade is a little bit different, so everything is exactly the same, but instead of the pullback to the 50% fib, I want the pullback to be to the absolute last candle which wick touches the top of the session, like this one. You see that small candle there, right? Its wick is at the top of this session. So what am I going to look for in that trade? I'm going to circle that candle from beginning to end. I'm going to extend this area here, and I'm going to take my entry of that candle. Okay, I'm going to put my stop loss to exactly the same area as the trade on the left hand side, and I'm going to aim for 2 risk to reward. Alright, so that's the rules, and yeah, let's get started, let's get moving. Alright, so I'm going to quickly delete everything. You can watch this by just stopping the video and then just going back to this area to watch this entry model as I explain it. Alright, let's get started, let's get started. Alright, let's go. There's the Asian session. This is Monday. Well, this is Sunday, the beginning of Sunday. But we're going to look for Monday, the 18th of August. Alright. So, exactly like I explained, what do I want? I want the testing of this area here at the top. Reverse for sell. Or I'm looking for the testing of this area here. Reverse or buy. Or whatever new low is being created. Let me show you what I mean. New low being created. We break that new low of the new high being created, sorry. New lower high being created. We break that new lower high. Retest for buy. Alright, that's what we're looking for. So let's just give it some time. Remember, this is also part of the low of the session, and those wicks are also part of the high of the session. Let's move forward. Okay, we test the bottom, so now we're gonna look for a buy. Okay, so the most recent high would be that, because we are waiting for a break of a fair value gap. All right, let's move forward. Okay, so in this case now our point of interest for the entry model moved, because we break that low now again, and we have a fair value gap here. All right, let's move forward. Price moving down. Now sometimes I like to watch the 4 hour, because it shows you at what levels are the 4 hour, right? So we are tapping a fair value gap here. And what are we also tapping? We are tapping an order block. This one here. We are tapping this 4 hour order block there as well. Let's extend this just to show us where we are. Alright. Let's move. Okay, so this, whatever's happening inside here is all internal structure, because that is our focus point with this move down, right? So whatever happens in between is nothing. You can just completely ignore it. It may sound strange, but trust me, this will save you in the long run. Only when this low gets broken, then we can focus on a new high. Okay, and we're not getting anything so far. Oh, there we go, there we go. Okay, so we actually tested the low. Now we have a new focus point right there. All right, let's move. Okay, we broke that low. Now we have another new focus point right there. All right. Let's move forward. Okay, we actually broke above this level, right? So now we are actually in our entry model. But just bear with me. Just see, where are we right now? We are at the beginning of New York session, right? So what does this mean? This entry model is inside the New York session. And you entered inside the New York session. But no, the entry model is inside the London session, but the entry is inside the New York session. So to be honest with you guys, I'm not going to take this trade. I'm not going to take this trade. It's too risky. What can happen? I've had it too many times. Price can easily go down, take us out, reverse, and just continue the trend. What it's currently doing. This trend. I've had it too many times. That's why I have something part of my rule which says the entry model of which session you are trying to enter into. The entry model must be in the new session, not in the old session, which is now the London session, right? Let's just give it some time. All right. And you see exactly that just happened. Exactly, just whatever I explained to you just now is exactly what happened. Price went up a little bit and then crashed down, took us out. Just imagine we entered from here. We could have caught a little move here, but for your own safety of your own capital, don't take a trade that's not A+. A+ meaning the entry model is inside the session you want to enter the trade with, right? For that specific session. In this case now we're too close to the New York session. New York session started, but we did not enter that trade. So we are going to keep on looking for a trade until 3 p.m. New York. So let's just move. We broke this low here, so that's now the new focus point. Sorry, I wanted to explain that. So now we wait. We did not close above that purple line. We actually close above, we close below this right there. So that's our new focus point right there. All right, so we move forward. All right, we close below there, so the new focus point is now here. Let's move. All right, do you see what price is doing? Price is playing around. It's playing around and it's respecting the bearish order flow. And stop. All right, we're done with Monday. Monday is a no trade. No trade here and no trade there. Let's go. Right, so the results for Monday is no trade. I'm not gonna even follow this structure here because, yes, this may seem easy. This structure is easy bearish. I mean, just looking at it. I mean, if you take your eyes and you just follow, what did price do? Close below here, right? went down at least. We had at least a 50%. So, you see 61.8% per pullback. We went down, close below that level. Now we have a new level that we can work off with. What did price do? Went up, tested the 50% fib level, went down. We move on because the new low was created. Price came up, tested the 61.8 and started going down again. You see, bearish. This is typical bearish market structure. This is why I love trading EURUSD, because it's so easy just to... The price action is just easy. Easy on the eyes. Try to do this on something like S&P 500, US 30 or NASDAQ, NAS 100 or US 100. Nah, you wouldn't get this price action so easily. No ways. In any case, let's move forward to Tuesday. Right, Asian session. Okay, 2 o'clock. And stop. Alright, in London session. We do what we always do. By highlighting the session lows and highs. Alright. Let's move. Okay. Breakout of the Asian session. Perfect. Inside London session now. And now we're looking for a sell. Okay. We haven't had any entry just yet. Actually, yes, we do. Alright, so price went up. Price went up. Broke this high here. That small high there. Closed below. Left a inverted fair value gap. And now we are looking for a sell. So we are basically looking for a retest of the 50 or the last candle that created the high. So we actually basically, since the last candle is inside this 50% level, we might as well just do this. Okay. 48, 78. There we go. And we can duplicate this as well. Okay, 1.5 and 2. Let's just wait because we have to adjust our fib tool as price moves. Oh, price actually just started going up. No, it actually went further down. Alright, let's do this. Okay. Okay, and then it started going up. Alright, so it tested the 45% level, but not the 50% level. Let's move forward. Almost the 50, touch almost the 50% level. Almost. Okay, there we go. So, we're in this trade. Let me just adjust the entry. And this entry here on this trade is at the bottom of that candle. So let's do this. That's our 2-to-1 risk to reward trade. Let's extend this. Alright. Let's move forward. Let's see how far this runs. And we got stopped out of both of them. So this is a absolute stop loss. There we go. On both trades. For London session. Alright, so let's move forward. Okay, we're not gonna do anything else. Let's have a look also on the 4-hour chart. So where are we right now? We are actually at a 4-hour order block, you see. Price went up, price went down, price went up, price went down. So where are we? We are at a 4-hour points of interest for a reversal. Price actually tapped this area very, very closely. It tapped the fair value gap just below that area. You see, that's this area here on the 4-hour chart. Fair value gap. Price tapped that area, made a reversal right there, retested 50% fib and went down. This was actually a beautiful sell here. Unfortunately, we had a stop loss here, so we are not taking any other trades during London session to protect our own capital because the market moves on. Are we forced to trade multiple trades inside the same session? No, we're not. It's your own mind that's telling you, I lost my money here, let's quickly try to make up for it. Yes, sometimes it works and sometimes it doesn't work. Sometimes price just keep on doing this. You understand what I'm saying? And then you're trading against the trend, and then what? And then you lose again. And whose fault is that then? You understand what I'm saying? So just be mindful of not over trading. Fear of missing out. Don't gamble. This is pure gamble. If you take a loss and you try to do another trade shortly after that loss because you want to make the money back, that idea, that whole concept of what you just thought about is gambling. You lost the gamble, now you want to gamble again to make up for the previous gamble loss, and again and again. That's gambling mentality. So that's why you need to protect your capital at the end of the day by stopping when you hit the stop loss. Stop loss means stopping at your loss. That's what it means. So yeah, let's move forward. All right, Tuesday goes on. There's the New York time frame. Let's just move forward. We broke out of the London low right there, and now we're looking for nothing actually, because where are we? Just past the 3 p.m. session, 3 p.m. timeline. So price went down, price went down, price went down, and it never looked back. So yeah, that's it. So yeah, let's move on to the next day. All right, let's move. All right, so this is Wednesday. We actually tapped the low of the Asian session. There is the Asian session high. All right, so what are we waiting for? We're waiting for a close above this level here. I am counting this level as we can use it because it's literally at the end of the session. It starts at the end of the session, at the beginning of the new session. So it's okay at best. It's not that tricky. It's okay. It's an okay entry. But let's say, for instance, the entry was here and price went down here, and then we use this as a high. Then I would say, no, sorry, no trade whatsoever, no trade, sorry. But this is at the end, literally the last candle of the session, at the beginning of the new session. So yes, this is still okay. This is still good for my entry model. So let's move forward. Number one, we broke the session low. Actually, we tested the session low, the wicks of those candles. Now we're waiting for a close above. There we go. We get the close above. Now we are waiting for a reversal. Now guys, just keep in mind, if price touches that area first before it starts reversing, then this buy is a no trade, because once price touches this, then we need to look for a sell. Just bear that in mind for future reference. Alright, Now we wait for reversal. So basically, what are we waiting for? You see this, let's see which candles are... You can't really say which ones, which candles are the lowest. We are at a 4-hour support level. Great. Right, so it's a good area to buy from. You see those? That low here. We are here. We are literally here. Right now. See, there's the line. We are here right now. Alright, so it's a good area to look for a reversal. We tested the Asian session lows. Price went up, broke this high. Now we're waiting for a... We already have an inverted fair value gap, by the way. You see there's one here and here. This is a double inverted fair value formation. So what are we looking for? We're looking for a buy from the 50% fib. Okay, 115 plus 30. 1.5 RR. There we go. So that's the one trade. The second trade is the entry of this last candle before the last bearish candle before the move up. You can use this bearish candle before the move up as well, but just to be clear, this bearish candle does not wick to the bottom of this low right here. This candle does. This candle does as well, but it's a bullish candle, so no thanks. So I'm gonna take my entry of that candle, extend, aim for 2 to 1, 2 RR. Come on, there we go. Alright, that's fine. That's perfectly fine. Alright, so let's move forward. Okay, we tapped in on this trade and this order block trade, and now we wait. We actually hit our TP here, and we hit this one's TP as well, just like that. Great. Now I stopped trading the rest of the day because I met my consistency rule on my, I'm just going to say this, TP and 2 BP. I met my consistency, so I did not need to take a look at the New York time frame. But just for the sake of back testing, let's look for a trade in New York as well. So this is the high of the London session. As price moved down, did it touch this high of the New York? No, it didn't. Let's move forward. Did it touch the high? No, it didn't. Let's move forward. Price went down. Did it touch the high? Yes, it did. Did we close below that level? Right there. No, we did not. Alright. Also keep in mind, we are looking for a trade until 3 PM New York afternoon. So let's just move forward. Did we close below it? No, we didn't. Did we close below it now? Yes, we did. So we could look for a trade because there's an inverted fair value gap right there. And we're waiting for a 50% fib pullback from this level and upwards. Not that level, because we didn't close below here. So let's wait. No, unfortunately not. I wish, to be honest, I would say I was awake at that time to look for this entry model. If I told myself, if this candle closed below that line, I would have loved to enter this trade on my small personal account. because this was a text, then it would have been a textbook entry model. We have everything. We have break the high of testing the high of the session. Then we have the break the new higher low. Then we have the 50% February test, and then we have the sell. Take a look what happened afterwards. Price just went down. So could we have hit TP? 100%. In any case, let's move forward to Wednesday. Right, let's move forward to Wednesday. Okay, London. Asian session. We were waiting for the break of the Asian session. There we go. That's candle wicks there. And then this one here. There we go. Right. So let's move. Let's just zoom in. Okay, we broke below, so now we're looking for a sell. A buy, sorry. Looking for a buy. Guys, we do have a high here that we can look for a buy. We actually closed above that level, but price never got back to us. And the thing is, price now tested the high of the session. So now what do we look for now? Instead of a buy, what do we look for now? We're looking for a sell. All right, let's move forward. Okay. Right, we broke this high. So this is now the new low to focus on, because there is an inverted fair value gap right here. There we go. Perfect. All right. So what is this last candle here? Let's highlight the last candle that created this high. All right. So now, what are we waiting for? We're waiting for a 50% Fibonacci pullback. I also took this trade on Wednesday, on Thursday. I took this trade on Wednesday, yesterday. Whatever I put here, these are the trades that I took this week, 100%. And I have the account to prove it to you, to show you the results. But let's just move on. We get back testing done. All right, so now we're waiting for a 50% fib pullback. All right, let's wait for it. Oh, price went up. Price went up. Actually, I entered. Yeah. All right, so let's just quickly show you what I did when I did this trade. All right, so I entered off this 50% fib level for my normal trade. And what I did was I broke my rules a small bit here for the 2 risk to reward trade. What I did was I actually entered that trade here on the 61.8 level. It was very close to that area there. I thought to myself, you know what? I'm going to take the bullet by just okay, 1.16578, 1.16572. That's literally 6 points difference. So I took my entry for the 2 risk to reward trade here. I extended my stop loss and I took the take profit at the same level. It was genuinely at the same level as the 1.5 risk to reward trade. So I let it go and I've hit TP. That was a beautiful trade, and we took that. We took that 100%. So let's edit this. We get our 1.5 TP, and we get our 2 TP. And that's it, we're done for the day because we've reached our consistency rule. But just for the sake of backtesting, let's look at New York. What did New York do? We broke out of the low of the London session. Now we're looking for a buy. We are still looking for a buy. There's the point of interest because here's a fair value gap, here's a fair value gap. Oh, we actually moved the point of reference to here because it broke this low. We went up here and now we are looking for a reversal. Price did not come back to the 50% level, but let's just quickly see here what are we looking at. We're looking for this. Okay, price is close below that high as well there. All right, we have our inverted fair value gap right there. All right, so now let's have a look here. Actually, what I did was I was done trading for the day, right, on my prop firm accounts. So what I did was I took a personal account trade. You see, I took the personal account trade of that candle right there, and I aimed for 2-to-1 risk to reward. I need to add 30 points and aim for 2. Alright, that's fine. Let's move. I tapped into this trade. Price started reversing. Barely. We're actually at the middle of the trade. We went to the middle of the trade. And we eventually got stopped out. That's what I wanted to show you guys. We eventually got stopped out because I kept the trade running during Asian time frame, and it took me out. There we go. Boom. It's stop loss there. The moral of this story is that it was a good trade. It was a good entry, right? It was a good entry because everything was aligned with our rules. It was even before 3 p.m. New York, so we entered it at 11 something, 11:55 New York AM. So at the end of the day, we still got stopped out, so it is what it is. And it wasn't stop out on our prop firm account. It was stopped out on our personal account which I trade on the 2 risk to rewards trades. So yeah, I took that loss there on my personal account. So let's now move to Friday. There's the London time frame. Whoa! What happened during London time frame? We tapped this low, right? So we actually looking for a buy. We looked for a buy since that time. Price went up, price went up, price went up. Did we get an entry? No, we did not. Why didn't we get an entry? Because you see this, I would have counted this as an entry here because that's still on the last that the entry is on the last candle of the session ending, right? But there's no fair value gap here. If there was a fair value gap, I would have counted this as a buy and I would have taken that buy with a big smile on my face because this is what happened afterwards. I kicked myself. See? Boom. How beautiful was this move? Like I said, EURUSD, guys, EURUSD. Take a look at this. Just use your eyes. What's this? Come on. Tell me. What do you call this move? Price went down. Price broke this high. Retested. Went up. It's a bullish reversal. It's a bullish move. It's bullish price action. And that's what it was. So yeah, it is what it is. Can't do anything about that now, right? So I was very unhappy on that Friday because I would have loved to look for a trade for this buy trade. It was a beautiful move up. But yeah, guys, when you are here, let me show you something. When you are here, you cannot for certain say that the price is going to go up. You can't. You cannot. Because the market does whatever it wants. And our sole purpose is to follow what the market give us. Follow what the market present to us. That's all that we can do. We don't have a crystal ball or some magical pot of gold or whatever that shows us our future, the market future. It's nothing like that. All we can do is follow what the market give us. That's all. That's all we can do. Can't do anything more about that. In any case, let's move forward. Okay, okay, the starting of New York time frame. So what are we looking for now? We're looking for a sell. Guys, just bear in mind, there was news at 10. And there was news at 12. It was Powell. Powell was speaking regarding the rates, the interest rates. And that does affect the EURUSD because it affects the USD. If it affects the USD negatively, what's price going to do? Price is going to go up. Because the euro is the leading part of the pair. So at the end of the day, the euro positive and USD negative, right? So if the euro is strong, price is going to move up. If USD is strong, price is going to go down because it's stronger than the euro. The USD is stronger than the euro. Now, if the news you see, I didn't take this, I didn't count this as a low as well because, so yes, I was, technically you can look for a sell here, right? But why can't we take this sell? Just look, just take your eyes and look at this. Where's that low? It's inside the London session. Is your entry model inside the previous session? If your answer is yes, then no trade. No trade. Done. Don't even force yourself. This may look pretty. You can actually do this. Right? We have everything in this entry model. We have everything. There's the low. There's your fair value gap. Now we're waiting for our reversal. Alright. We move, we move, we move. Boom. Chris, what on earth happened here? What happened here? The news. The news happened. That's what happened here. So there's nothing you can do about this. Nothing. Right? So what saved us? What saved our money management? What saved our capital? What saved our capital from, remember, once you have a trade, once you've entered the trade and there's a news event that's going to happen like this, right? What's going to happen is that your prop firm account or your broker is not going to close. If you put your stop loss here, your broker is not going to close your trade here. You're going to have something called slippage. And your spread is going to be bigger because news events like this have much bigger spread, much bigger it's much bigger movement. So instead of the broker closing your trade here when you put your stop loss here, it's going to close your trade here. How many points is that? That's 80 points, or even 100. It might even close it here, 100 points. And then whose fault is going to be that? Whose fault is it going to be? Your own fault. So this is why we have rules in place to stop us from making stupid mistakes. Remember, our strategy is not based on news, but if we have news that affects the US dollar, you must, especially red folder news like interest rates and stuff like that, FOMC, NFP, what's the other one? CPI, right? FOMC, NFP, CPI, the big three red folder news events. They all affect the US dollar, USD. And in this case, it affected it negatively. Why? Because EURUSD skyrocketed up. Because why? The US dollar index went down. That's why. Because it affected the US dollar index negatively. Any case, long story short, no trade. No trade because why? Our entry model started where? In the previous session. That's it. Full stop. Alright, let's move forward. We're looking for trades until when? Looking for trades until that time. Right there. 3 p.m. New York afternoon. Alright, let's move forward. Price went up like a mad thing. Alright, so guys, I want to bring your attention to this. Right, so our entry model is close to another big news event. President Trump is going to speak. Right? So now, here we have a trade entry that we can take. There's a small fair value gap, very small fair value gap. Alright, so now, what now? That's fine. I actually took this trade on my accounts, right? Just to show you guys how painful this is actually. So price closed here. And where is our entry of this trade? Come on, tell me. When is the news event? So tell me just straight, right? So should I have entered this trade? Yes or no? How close is it to a monumental news event like this one? 5 minutes away, 10 minutes away. Is it okay for us to take a trade close to a big news event? No, it's not. There's the news. It started. Price started reversing. We tapped our entry. I had my trade here. Let's make it 130. It's fine. Alright. 1.5. There we have our trade. Beautiful. And now we wait. We get a small reaction. Very small reaction. And then price took us out. Why? When did we enter our trade? Shortly after the news event started. So, once again, guys, a new rule to protect my capital in the future. No trade entry at least what? Let's see. 12. I'd say at least 20 minutes. I'd say 15. 20, let's say 30 minutes. Yeah, there we go. No trade entry. 30 minutes before news events. Okay, this is 100% now part of our entry model and our strategy, and I'm going to stick to the strategy going forward. I'm not going to waste my time or my money on news events. I'm sorry, I'm not going to do that. I'm not going to waste my capital, my time, my efforts into a trade that's based on being inside a news event or so close to a news event. So this is a very important lesson to learn. Any case, guys, that was, oh sorry, let me just update this now, right? So that was a stop loss here on my personal account as well as on my prop firm accounts. So what's our total results for this week? All right, total profits. If we risked 1% per trade, it would have been 1.5. So it would have been, if we take a look at the wins for only the 1.5 risk to reward trades, it would have been 3%, right? And if we take a look at the trades for the risk to reward where it's 2, it would have been 4. Now we take a look at the stop losses, right? So Monday was a no trade. Friday was a stop loss. Okay, Monday was a no trade. Tuesday was a stop loss. Profits. Oh, sorry, I have to... This must also be 3, by the way, because I took a stop loss on my personal account extra. All right, there we go. So this is 3, and this is 3. All right, and we took a stop loss here. So we have 2 stop losses. So it's minus 2 equals 1% profit this week. Minus 2 equals 1% profit this week on both entry models. All right, so was it a profitable week? Yes. But what could we learn from this profitable week to avoid in the future trading around news events? No go. No thank you. That cost me 1% of profits. That cost me, if we did not have that loss, if we actually said, all right, today was a no trade, we would have had -1 instead of -2, and we would have made 2% profit, which is ecstatic. It's insane. Good, great, perfect. So yeah, lesson learned. Thank you so much, guys, for watching, and yeah, hope you tune in for the next EURUSD breakdown. Cheers.